Right, the required. Question 1 says, refer to the employee 1, Victor Tladi. You are required to discuss the VAT implications for Gojira Limited for the month of April 2019 in respect of the payments and benefits provided to Victor Tladi. VAT implications. You are required to provide brief explanations and calculations to support your answers. Clearly indicate whether an amount pertains to input or output tax. And you are required to also specifically discuss the timing and the value of supplies. Now, this timing and the value of supply story that I say here, you should discuss it specifically. To be honest with you, I just wanted you to just focus on that. They don't have to tell you that. You should know, unless they tell you specifically not to do it, that you should discuss the timing and the value. Okay, now, the first thing I'm going to do, guys, I'm not going to write this all out. That's pointless. Let's just quickly talk about the timing rules here. Right, so first of all, the VAT rules. Section 18.3 says that if you give a fringe benefit to your employee, it's deemed to be a supply. And if this is a supply, it means you have to calculate output tax on the fringe benefits. Section 9.7 says that this happens at the end of the month. So if it's in April, we'll include it in the April VAT return. Section 10.3 is the value rule. It says it's deemed to be the cash equivalent, and that is determined in the same schedule. The only place where this is not the case is where there's a company car. Then the government gazette told us how to do that, and that was the government gazette all the way back in 1991. That's the formula that you need to know. It is also in your Psycho Student Handbook. Right, the only thing I didn't actually include here, but for which there potentially would have also been some marks, is the general timing and value rules. The general timing and value rule, timing says earlier of invoice or payment, and the value rule says it's the value, the consideration that was charged. Alright, so let's go and chat about these different ones. You've got the solution there, the printed one, so let's talk about it. Right, so I'm not going to write it all out. Note 1.1, the monthly salary. Will there be VAT on that? No, because it's remuneration. And if you go and look at the definition of an enterprise, remember section 7 tells you when there's VAT on something, when there's supply of goods or services by a vendor in the furtherance of an enterprise. So you need to have all those elements there. The definition of an enterprise tells you that remuneration, salaries and wages, those things, is not the furtherance of an enterprise. So that means your employee does not raise a VAT invoice, and therefore you can't claim anything. So there's no VAT. Okay, then we've got note 1.2. Victor was promoted to his current position on the 1st of March 2018. At that time, he became entitled to the use of a company car. Right, so actually, I will do the VAT on this one. I'm just going to write it out here. And I want to just do it because we are actually going to use this information a little bit later. Alright, so the VAT on the company car. The formula says it is the cost of the vehicle, 640, including VAT, right? It's always the value of the vehicle excluding VAT. Okay, I divided by 114. Why? Because this was purchased on the 1st of March 2018. On the 1st of April 2018, the VAT was increased to 15%. So this was before then, so VAT was still at 14%. Right, then, do you remember this whole story also, what we do for income tax, where you multiply it by 85 and 85% because the 12 months have passed? That same issue applies here, that same thought process applies here. We don't often see that in VAT questions. Times 0.3% close that bracket. Then we deduct from this 85 rands if the employee is required to pay for the maintenance. Right, who pays for the maintenance here? Gojira. Right, so less null. Close the brackets. Then you multiply that by the tax fraction. See, 15 over 115, guys, not 14 over 114. We're only doing it here because we have to exclude the VAT. Use the cost excluding VAT, and there was 14% VAT there. The VAT rate now is 15%, that's why we're applying this. And that times 1 month gives us $159. So $159 per month. I want you to just remember that. Okay, that's output tax for us. What did we also then see? And I'm not going to discuss the whole thing now, but the company also pays the insurance and maintenance. So they can claim the VAT on that also. So you would say times 15 over 115 times 15 over 115. Now you'll see, guys, in my solution, I make a comment here, which is true, that the question asks us to do the VAT for April, but they give us here the information for the year. So all I want you to remember is that you would apply this calculation to the amount for that month. If you had went and you divided everything there by 12 to get a monthly one, you applied that would probably be accepted in an exam just because of the fact that there wasn't information given. So if you had divided that by 12 and then times 15 over 115, you could probably, I mean, it's not necessarily correct in reality, but that's a fair assumption to make. That would have been okay, guys. If you just applied this to the whole year, they might be lenient in the exam, but just be aware of the fact that it is for an entire year and they only asked us to do it for April. Then, note 1.3, they gave this guy a place to stay in, but that's residential accommodation, and residential accommodation is exempt from VAT. So there's nothing on note 1.3. Okay, then note 1.4, this is the free lunch break. What can Gojira claim here? Nothing, because it's entertainment and input tax is denied. So that's when they buy it. Then they give it to him for free. Will there be VAT on that? Well, first of all, there's a section in the VAT Act under consideration that tells you if you give away something for free, unless it's to a connected person, to anybody else, then the output tax is just null. Right, so it tells you to use null. But in this case, if we talk about the input tax, I'm talking still about note 1.4. Input tax would be denied. All right, and the output would be, you would just say no output tax as input tax was denied. Remember, that's how it works. So it's not the fact that it's free that's determining that. It's the fact that it was no input tax could have been claimed. Section 1021 tells us that the output tax is null. And then note 1.5. This is Victor paying to a pension fund, or retirement annuity fund rather. This has got nothing to do with Gojira, so there's obviously no VAT on it because they asked us to do it for Gojira. Right. Then question number 2 says, calculate the amount of pay as you earn that will be reflected on Victor Clary's payslip for the month of April 2019. You are required to show all calculations and briefly explain your answers where required. You must assume that Victor's remuneration proxy amounts to 460,000 rands. Okay, excellent. So let's do this one. So remember, guys, again, just good exam technique. Be kind to your markers. Start each question at the top of a new page. Make sure that you put down the necessary headings for when you are performing calculations. Usually in these headings should be enough. Description, calculation / explanation. There's no capital gains tax column, but there is a rands column. That's where we include our remuneration. Okay, so now you're calculating employees tax. So let's start. Note 1.1, salary of 35,000. And I'm keeping it on a per month basis here. We can do annualization a little bit later. Note 1.2. Right, so this is now the company car story. So remember, the vehicle cost 640,000, had it for 2 periods, right? When we look at the business kilometers traveled, we saw that he traveled less than 80% of the time for business. He traveled 71% of the time. So that means the remuneration will be calculated at 80%. We also saw that there is no maintenance plan. So here we go. 640,000 amount including VAT, because the company couldn't claim VAT, motor car, times 85%, times 85%, times 3.5%, so that gives us per month. I'll say here times 1 month, times 80%, that's remuneration. Okay, now, important here, do we take into account all of this other information? No. This is where we end for employees tax. Note 1.3 is the residential accommodation fringe benefit. Okay, and I'm just putting it down again as a reminder of how it works. So A is the remuneration proxy. And the remuneration proxy is given to us in the question as being 460,000. So in the required, sorry. B is the abatement amount. It's given to you in your latest SAICA student handbook. If you do not have the latest SAICA student handbook, you have to look at the information that's provided to you in the exam. It's the tax threshold amount, 78,400. C is 18 because it's about the amount of rooms. He complies with the amount of rooms, and then he does not have water and electricity paid, but he does have, it is furnished. And times 1/12. Okay, then we have note number 1.4, which is the meals in the staff canteen. Remember, we are doing this now for what goes on his payslip. Meals, and that is there's no value as it is enjoyed at a staff restaurant or staff canteen, whatever they say. Okay, what else do we then have? Note 1.5, which is our retirement annuity fund. Okay, so now we add up everything here that we've calculated so far. We can now do note 1.5, the retirement annuity fund contributions. And we'll say, give a reference to section 11F. But now remember, guys, we don't pay as you earn. So it works as follows. So the actual They told us it's 8% of his salary. Was it 8%? Yes, 8%. And his salary was 35,000 rands. So 2,800 rands per month. This is now limited to the lesser of 350,000. That's for an entire year. So if you do it if we want it on a month, divided by 12. 29,167. Or 27.5% times remuneration. Now that 53671 we calculated above, that is our remuneration. I should have actually labeled it as such. So it does 27.5% times 53,671 gives us 14,757. So the lesser of 29,167 and 14,757, you have to conclude it is lesser. So the lesser or the limit is 14,757. You then need to make a statement about comparing it to that 2,800. So remember, you can deduct that whole amount unless it is more than this amount. In this case, it's not. May deduct the actual contributions. And we deduct 2,800. Okay, now, again, some of you, if you're looking at this now and going, well, what about all of the other stuff? Because there's actually more limits. We say 350,000 or 27.5% times the greater of the taxable income, including CGT or remuneration, or our last limit is the taxable income excluding CGT. We have that whole story if you remember that. That is not applicable, guys, when we are looking at employees tax. The employer can only take into account your remuneration, and your employer also only knows about that 350,000. This is how we do it for employees tax. Okay, so now, before we had this deduction, that was called the remuneration. We now calculate the 5871, and this is that figure that we are looking for in the fourth schedule, the balance of remuneration. That is what we calculate employees tax on. But this is the balance of remuneration for only 1 month. So we say then we have to annualize it. Annualized basically just means we're expressing that in terms of a year, because our tax tables works in terms of a year. Now remember, I know some of you might say, but what if in May or June or July or so forth, they earn other amounts so that this figure changes? That's fine. You will do this calculation every single month. Right, you can only do what you know in April. So 5871 times 12 gives us 610,454. We then go and get our tax per tables and our primary rebate. Now guys, these amounts in this question specifically have been calculated according to the tables at the beginning, which I gave you, which is not the correct ones, remember, but the ones I wanted you to use. So if you know how to use the tables, you would still get to the same answer. If you use the actual ones in your Psycho Student Handbook, then you would not have gone to the answer. It doesn't mean you're wrong, it just means that you used a different set of tables. Right, so this is the employees tax that we assume for the year. So thus, for April, it is 155,797 divided by 12. Gives us 12,983. There we go. Then question number 3, they say refer only to notes 1.1 to 1.4. So for employee 1, show using calculations the effect that the various payments and benefits will have on the taxable income of Gojira. Right, for the year ended 29th February 2020. And note, they're not asking us for Victor, they're asking us for the company. And this is what I meant during the reading time when I said to you, Be careful of anticipating what the question is going to ask you. Okay. 1.1 to 1.4. Okay, so what's the effect? So Gojira pays him 35,000 rands. So what can Gojira do with that? This is a salary section 11A deduction. 35,000 times 12. I expect that some of you would have started messing this up because it's all of a sudden asking you for the company. I hope you didn't. Maybe none of you did. And then that would be very great. If you did, please pay attention to this, what I'm doing here. Because I want you to see that you shouldn't plan too much because you never know what they ask you. Right, note 1.2 is what? The vehicle. Okay, so let's go through this bit by bit. So the first bit is what you see here that I talk about up to here. Is that Victor had got a vehicle, and he had a company. There was a company. It's a company car, and one of the things that you remember about the company car is that there was VAT on it of 159 rands a month, output tax. That amount, company car. Let's do it like this: company car. VAT on the fringe benefit, 159 a month. You can claim that. Please remember that, guys. Meets the requirements of the general deduction formula. Claim a deduction. That's a tricky one. You might have missed that. What else can Gojira claim on this company car? They can claim wear and tear, because it's a vehicle used in the production of their income. Now, important, this vehicle was purchased on the 1st of April 2015, and it has a useful life of 4 years. So 1 April 2015 plus 4 years equals 1 April 2019. Right. When did our tax year start? 1st of March. Here's the 1st of April, so it's 1 month. So there's only 1 month left of this vehicle's useful life. So it was 640,000, the amount including VAT because we couldn't claim VAT, divided by 4 times 1 over 12. Then what else do we know? They have vehicle running costs. Insurance and maintenance, can we claim that? Yes. Could we claim the VAT on it? Yes. Remember, input tax is denied on the vehicle, renting a vehicle, buying a vehicle, a motor car. But it's not on the other services. So this insurance and maintenance over here, 32420. Right. Then we have note 1.3. So what do we have here, guys? Section 13.6. Section 13.6 you can either calculate at 5% or at 10%. 10% if it's low-cost residential units. Okay, so test for low cost. Residential units. Cost per unit. Okay. 24,800,000 including VAT. Could they claim the VAT on it? No, because it's residential accommodation. And that's for 40 flats. Make sure to see we use the amount including VAT there. If they gave you an amount excluding VAT, you would have to add it back. Be careful, that's a common trick in exams. 620,000 rands. As the cost exceeds 350,000, that's the definition. It's not low cost residential unit. So, thus 24,800,000 times 5%. And then note number 1.4, this is the lunch, the meals, right? The total for the year was 14,000. That's a cost to the company, but you must include the VAT because they can't claim it. That was the trick here. Note 1.4, the meals. You would be able to claim a deduction under section 11A, but you would have to remember that you would have to add the VAT back. So we multiply it by 1.15. And as we all add up, and this is the effect on taxable income. Right, so that 14 million again, guys, is because we couldn't claim the VAT. If you could claim the VAT, you would use 14,000. If you can't claim the VAT, you have to include the VAT. And that's not just for, obviously, this situation. It's for any situation where you weren't able to claim the VAT. Maybe you bought something to use for exempt supplies. You wouldn't be able to claim the VAT. It applies for all of those situations. All right, guys. That's it. In our next recording, we will continue with the last bit of the question.